After a 1 year hiatus, the Building Alabama Reinvestment Conference is back, and we're so happy to be able to bring it to you. This organization fosters dialogue and partnerships between community economic development organizations and financial services providers. BAR seeks to support, create, and implement long term solutions, which include providing tools and resources to build community and individual economic well being. One of the things that we know to be important is establishing and building the appropriate relationships with financial institutions. The Community Reinvestment Act remains one of the most important laws governing banks and their activities with respect to how they provide loans, services, and make investments in low and moderate income communities. Our ability to forge partnerships with financial institutions is more important today than ever before. And so we're pleased to be able to bring you the information that will be shared with you during this program. Panel discussions, training for organizations, case studies in successful community development, best practices, plus an inspiring message from Jesse Van Tall, the leader of our national coalition. NCRC founder John Taylor has been known to say that banks are our community's best hope. And at this moment in history, I certainly concur with those comments and thoughts. As the banking landscape in Alabama and across this country changes, it makes our organization and our work even more important than they've ever been before. That is why conferences like this and conversations like the one we'll have today and even beyond today are so critical to the economic development of our communities. So for the next 2.5 hours, you'll be provided with a great deal of information. I certainly hope that you realize, as I do, that our work doesn't end here. In fact, this is just a new beginning. We must use our information and hopefully the encouragement from today to spur us all to action, creating partnerships, understanding better how to make sustainable differences in our communities. Welcome to the 2021 Building Alabama Reinvestment Annual Conference, and we are certainly ready to raise the bar. Now, it is my pleasure to present BAR Chairperson of our Board of Directors, Mary Ellen Judah. Mary Ellen?
Thanks so much, Bob. On behalf of the Board of Directors of Building Alabama Reinvestment, we'd like to welcome you to this year's conference. We'd like to thank all of our sponsors and, of course, great appreciation for our affiliation with the National Community Reinvestment Coalition. It has been a particularly hard year for all of us, and I hate that we are still doing things virtually. I'm looking forward to getting back to face and shaking all your hands and giving you some hugs, but I'm glad that we're able to get together like this because the work that we're doing is more important now than ever. The past year has been tough on all of us, but it's been particularly tough on people of color and those in underserved communities. And that's why the work of BAR and NCRC is so important right now. So I hope you'll take some good things away from today's conference. At this time, I'd like to turn it over to Cornell Wesley, who is the Director of Economic Development for the City of Birmingham. We're so pleased to have you with us here today, Cornell. Thank you so much.
Greetings. My name is Cornell Wesley, and I serve as the Director for the Office of Innovation and Economic Opportunity for the City of Birmingham. We are excited about the conference, and your participation speaks to your willingness to proverbially raise the bar and champion the efforts of impact and equitable access to resources. As we all know, the Community Reinvestment Act was founded to encourage financial institutions to help meet the credit needs of the communities in which they do business. And as business conditions improve in this post-pandemic economy, your work in this area is all the more important. So on behalf of the Woodfin administration, I want to applaud you first and welcome you second. I applaud you for your intentionality and I welcome you to this conference. Our hope is that you will leave reinvigorated with ideas for implementation. We greet you and we welcome you.
Well, thank you, Cornell Wesley, for those greetings on behalf of the city of Birmingham. Thank you so much for being with us today. And now, once again, it is my distinct pleasure to introduce one of our outstanding board members who, in her own right, is doing outstanding work developing our community. I am talking about none other than the executive director of the Hub CDC, Pamelia Harris. Pamelia?
As a board member, I would like to welcome each of you, and I hope that you are enjoying the Building Alabama Reinvestment Annual Conference. I am Pamelia Harris of Pamelia Harris Consulting, and also the Executive Director of the Hub Community Development Corporation in Birmingham. I know some of you follow me through the NCRC Training Academy. I am always happy to see you out there. When you come in, please give me a shout out. I'd love to come and visit with each of you at your office and in person, have a nice chat over a cup of coffee with what's going on at your shop. But during the pandemic, that's not possible. So over the past few weeks, I've been working on a little something as a toolkit or a guide, if you will, for nonprofit leaders to help them fortify their organizations and themselves as well to be able to withstand stressors and crisis. So for about 10 minutes, I'd like to share a little bit of it with you, if that's okay. I'm going to talk about resilience. And I know that's the buzzword, it's everywhere. I opened up a subscription box, and the first thing that I saw was the word resilience. I was like, okay, we even got resilience in hair care and makeup now. But what does that word resilience mean in the nonprofit world? Resilience, or what I consider it, is your organization's ability to absorb and adapt in an evolving environment and guarantee as much as possible the achievement of the organization's goals. So here's a couple of tips from my little project that you may find useful on your journey to nonprofit resiliency. My background is in construction, and as a construction manager, I often would handle troubled projects or projects in crisis for different entities. And in construction and as a construction manager, we utilize reprioritizing, risk management, leadership and coordination, as well as critical path organization. When I came over to the nonprofit side, I brought those same tools with me. And because of the pandemic and the crisis that we've been through, I'm currently utilizing those same skills to help my own nonprofit and other troubled entities reimagine themselves and restructure and get going back, what I call back to the future. The first thing as a nonprofit leader that I think would be a great idea to do is to change your watch, sort of like the daylight savings time. Get back on schedule and get on track with the current time. You can't do it all at one time, but make sure that what you're doing for your agency is what's relevant to the current times and not the old times before time changed. One of the first things I want you to do is to develop a recovery schedule. And that schedule will redefine who needs to do what and when it needs to be completed. As you arrange or coordinate your recovery schedule, make sure that you use interface management through identifying roles and responsibilities across multiple layers of stakeholders and team members. And you want to communicate the schedule with the team. It's tempting as a director or a leader to kind of know what's going on, see the big picture, and just kind of stay close to keep it close to the cuff. But particularly in these times like what we're going through right now, it's important that we give staff, funders, and the community the necessary information that they need in order to maintain trust and also to be an effective team member to help us in our recovery. The next thing that I think is extremely important is risk management. And why do I put risk management first? It's because 63% of nonprofits at some point in time have a claim against their liability insurance. And that's enough that can be really devastating to your organization. I don't know about you, but I've experienced it, and I've worked with a lot of nonprofits who've experienced it as well. Some of the things that can happen, a lost laptop leading to maybe a data breach that compromises donors and staff and other stakeholders' private information. That can hurt your fundraising efforts. Or perhaps a nonprofit employee that got caught doing some things that they shouldn't have done concerning funds and cash, or maybe a wrongful termination lawsuit from a former staffer involving the nonprofit board. And that could lead to actual board members using their own assets to pay for their legal defense. And all of those things are not appetizing as we think about what we want for our agencies. And so that's why I put risk management first. What will we look for? If I were to come to your agency to do a risk evaluation, I would look for unaddressed vulnerabilities such as governance risk, financial risk, regulatory compliance and legal risk. Are we certain that the procedures that you currently have in place, including human resources, fundraising and donations, grants, do they adhere to the applicable laws and regulations under these current conditions? They might have been absolutely fine 2 years ago, but are they good in 2021? And then also goodwill and reputation risk. And you want to make certain that you avoid risks that could be possibly damaging to the reputation of your organization. And that includes as well data protection and private identifying information. How are we handling those in this working remotely and technological age? So in looking at those things, we would want to make certain that we first evaluate what we're doing now and then look for opportunities to increase our protection and also increase the resiliency of our agency. Now, the board has a role as well. And as we're reimagining our agencies and getting back to the future, what is the board doing? Boards need to be prepared to help their organizations scale, seek stability, and achieve the footholds that the agency is going to need in the new normal. And then also, they need to be transparent about opportunities as well as challenges. Nobody wants to just get beat up. Every once in a while, it's nice to have a that a girl or a that a boy. And then boards need to be intentional about disclosing specific actions necessary to achieve the goals. We shouldn't be working in some mysterious silo that no one can tell what we're doing, but just know that it's good for the agency. No, we need to be transparent and we need to be forward thinking as board members. We need to identify long range goals and aspirations. Boards right now should think short, to tighten the focus and map out where they want to land within the next 12 to 18 months. That's critical. I know everybody has their long range plan, but we need to think short term as well as long term. And then boards need to be informed. So the board manual should contain dashboards and summary sheets with sufficient information on critical relationships with external entities, key outside consultants, and service providers. Why? Because as we know now, as 2020 taught us, you never know what's going to happen. Incorporate instructions and language for discussing the organization's plans internally as well as externally with stakeholders and the public. Now, your mission statement. That's another thing that I would look at with you. And we could chat over a cup of coffee, and I would ask you, has pandemic opportunities changed the way that your organization does business? Has it added new lines of business or serve residents in an extended area that you weren't servicing before? Or has your mission significantly expanded or contracted during this pandemic time? If it has, it might be a great time to revisit your mission statement. And that's not something that you would do by yourself. You don't do that inside of a bubble or a silo. You would arrange an evaluation team and look at the mission statement and see if it needs to be updated or expanded. Ensure that the new mission remains consistent with existing commitments. Don't jeopardize your tax exempt status. And then, if you do make changes, revisit and update the bylaws as necessary and take care of those as well. And then don't forget to communicate with the entire team on the new or revised mission statement. So, as for you as leaders, because I know I've said a lot in the past few minutes, you want to develop a risk leadership focus where you develop a risk management plan to address the vulnerabilities and minimize potential negative impact. But you also want to adopt robust risk management policies. Tighten up what needs to be tightened up. Obtain additional insurance coverage if you need it to safeguard against possible compromise. And then make risk management meaningful as you talk to your staff by being transparent and use plain language, don't get too technical, because then it's sort of like that cartoon character, blah, 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 blah. No, make it meaningful. Also, think about adopting some transformational leadership qualities. And transformational leaders, they make organizations more successful by embracing and valuing and inspiring team members. Lead while walking in the shoes of the team and adopt resilient qualities and practices, not just the commitment to the mission, but also crisis management techniques like expeditious decision making and being transparent. In construction, we call it working heads up. And that means that you're looking forward and anticipating future situations. Last but not least, maximize educational opportunities for yourself and stay calm so that you can meet future crises head on while finding opportunities during difficult constraints. Last but not least, remain nimble, stay flexible, roll with the punches. It's imperative that you do that as you redefine and evaluate your agency. I hope that this little talk has been helpful, and I also hope that you continue to enjoy the rest of the conference. I'm looking forward to spending some time with each of you virtually, and hopefully next year we'll be together again. Thank you. I'm Pamelia Harris. Look forward to, once this guide is published, that Building Alabama Reinvestment will have the links, and I'm sure they'll share it with you. Thank you.
One of the things I mentioned in the opening was the importance of establishing partnerships with financial institutions. It is critical to the success of not only our organizations that comprise the bar membership, but also important to our community as well. At our last conference that we were able to do in person in 2019, the panel discussion that was our biggest hit, meaning that our members got the most from it, was where we had our bankers share what they look for in partnering organizations, some of the things that they are doing in their shops to enhance their efforts to really help the community. And so we've asked a group of bankers to come and do just that again. Let me tell you who we'll have, and then I'm going to get out of the way, and they're going to come to you in this order. First, we will have Melody Morissette with BBVA. She will be followed by Delpha Bartley Jones with Valley Bank. Then Tracy Morant Adams with Renaissance Bank, Paul Carruthers from Regions, Paula Beck from Wells Fargo, and finally Beth Trotter from Iberia First Horizon. I'm sure you're going to enjoy this section of our program.
Hello, I am Melody Morissette, the Community Relations Executive for BBVA's East Region. Thank you for the opportunity to bring greetings on behalf of BBVA and also share a few components of the bank's community development strategy, along with the work we're doing in the community. I have a few slides to share with you. BBVA is currently in 7 states across the Southwest, known as the Sunbelt region, in which we have 642 branches, approximately 10,000 employees, and $99 billion in assets. Our tagline and purpose is to bring the age of opportunity to every community we serve. Our values are: the customer comes first, we think big, and we are one team. Our purpose statement and values have been embraced at every level and in every department, from here in responsible business to mortgage and digital banking and everywhere in between. Next, I'd like to tell you about our community-focused team. The responsible business team leads community development and corporate social responsibility efforts with the primary objective of achieving outstanding CRA performance. Our CRA administration team ensures technical regulatory compliance and leads our CRA strategy. In community relations, the division I support, we have a deep involvement with local and national community partners. We're committed to providing capacity building and impactful grant making. We work closely with many of you to provide grant funding and support programming aligned with our giving strategy. This alignment between a financial institution's giving strategy and nonprofits programming is really, really key in making funding decisions. Our local and regional community relations teams also manage our Center for Financial Education Workshop Initiative. This program is designed to increase financial capabilities of low and moderate income adults and small businesses. We have topics that relate to personal finance, home ownership, and small businesses. These workshops are hosted by our nonprofit partners and delivered by BBVA volunteers. In 2020, our BBVA Center for Financial Education program expanded to 53 partners at 66 unique locations throughout our 7-state footprint. On the production side, our Community Development Capital team provides debt and equity capital for low-income housing tax credit properties, LIHTC deals. An example of that would be the Villas of Titusville in Birmingham. Our small but mighty Community Development Finance team provides capital through innovative investment and lending vehicles and have more than $100 million in equity equivalent investments with CDFIs. And then finally, our Community Development Banking mortgage team focus on LMI lending to minority borrowers and communities. Community stakeholder engagement and feedback is really important to ensure we're meeting the needs of the community. We have a community advisory board, we refer to as CAB. It's comprised of executives from local, state, and national community-based organizations and CDFIs. The CAB provides feedback to senior management and helps to identify bank opportunities for community development loans and investments. The CAB has really been instrumental in helping BVA effectively serve communities and achieve the bank's community development goals. We have regional partner summits, and these are used to provide stakeholders relevant research and data from trusted experts such as the Federal Reserve Board and Urban Institute. We receive stakeholder input on regional needs for community development. And then finally, our grant application surveys. In an effort to automate our needs assessment process, we use our grant portal to collect data from our nonprofit partners. And finally, I'd like to conclude by telling you about BBVA's 2020 COVID-19 response. In Birmingham, the bank provided over 800 PPP loans totaling $128 million to businesses. We also provided 3.7 million in donations and PPE across our footprint, along with support to our employees. This concludes my presentation. Thank you, Bob Dickerson and Bar Conference coordinators for the opportunity to share this information with you. And thank you all for the work you do in the communities.
Good morning and welcome to the annual Bar Conference. I'm Delpha Bartley Jones, Regional CRA and CSR Officer for Alabama at Valley Bank. Today, I will be discussing partnering for community success. At Valley, we have grown to over 200 locations in New Jersey, New York, Florida, and Alabama. We are $41 billion in assets, and from a corporate social responsibility standpoint, we have 4 pillars of focus, and they are promoting affordable homes, inspiring innovation and entrepreneurship, stimulating economic and community development, and living our commitment to impactful local leadership. At Valley, we have 3,000 plus employees who are passionate about community and serving. With $41 billion in assets and over $31 billion in loans and deposits. Some of our community investment highlights are over 6,000 hours of associates volunteering within the community, helping around 11,000 people and small businesses. In 2020, we invested $231 million in efforts to support LMI neighborhoods and businesses. And last year, we did over 13,000 PPP, Paycheck Protection Program loans. That's 170,000 jobs impacted. Serving the community through neighborhood-based strategies and providing products and services to low to moderate income families and small businesses are some of the core things that we believe in and the core things that we do to help make an impact within the community. We're passionate in improving social and economic as well as environmental conditions, and we're very proud to have been recognized for our efforts. On Valley's most recent OCC performance evaluation, we received an outstanding. As you know, less than 10% of financial institutions are able to accomplish this. So for this, we are very proud. In 2020, Valley was recognized as a winner in the top 125 for the Training magazine for our learning and development team. Valley is a preferred SBA lender. And lastly, something a little bit closer to home, we received the Community Commitment Foundation Award from the American Bankers Association, ABA, for our initiative and commitment to the Lake Martin Innovation Center. And we are so thrilled for the work that our associates and our community partners are collaborating on. We believe in investing in our community, and I'd like to share with you some of the ways how we invested in 2020. Over $2.3 billion in payment protection loans last year, $229 million in multifamily lending, and over $380 million in residential mortgages, to name a few. In regards to investing for collaboration and working with our nonprofit organizations, we want to cultivate trust, determine shared intrinsic goals, be able to define and clarify the scope of the owners, and understand the stakeholders' expectations. Valley, we want to increase opportunity for impact, build capacity for sustained growth, and provide feedback on impact so we can continue to grow and develop and meet the needs of the community. Our impact areas are community services, affordable housing, revitalization and stabilization, and economic development. For our small businesses, some of the core things that we try to provide are financial literacy and seminars and workshops to small businesses, as well as the housing counseling agencies to individuals. We also want our nonprofit organizations to know that we provide financing for them as well to improve the community health. Valley wants to help in providing products and services that's going to help and benefit LMI individuals, and overall to be able to better understand our community's needs and requirements for capabilities. Increase homeownership. We did many webinars on the Journey to Homeownership webinar in 2020, where we provided resources to our clients to help them navigate through the homeownership process. Our Community Advantage Homeownership Mortgage Program is designed for first-time home buyers. We also offer VA mortgage loans as well as FHA loans, and provide a Valley Journey check-in, which helps a lot of clients, especially if they've had issues in the past and they need a second chance. Our associates enjoy volunteering and are committed to helping the area by providing technical assistance to small businesses, provide homeownership workshops to low to moderate income individuals and families, provide financial capability training to individuals with disabilities, as well as partnering with our CDFIs to provide training to staff, reviewing underwriting loans, and providing mentorship and tutoring to youth and students K through 12. We would not be able to make an impact without the help and support of our community partners, and so we thank you for collaborating with us. Some of the agencies that I'd like to recognize for their partnership with Valley are the Lake Martin Innovation Center, the Birmingham Business Resource Center, Urban Impact, the Birmingham Urban League, NHS, HICA, and Titusville Development Corporation, to name a few. We thank you for your partnership, and we look forward to enjoying the rest of this conference. Thank you so much for the opportunity to present today, and enjoy the rest of the conference.
Thank you, Bob. I'm Tracy Morant Adams, Chief of Community Development and Corporate Social Responsibility for Renaissance Bank. Hello, I'm privileged to join you and bring greetings today on behalf of our President and CEO, Mitch Waycaster, and the entire Renaissance Bank family. We at Renaissance are honored to support the 2021 Building Alabama Reinvestment Conference, a platform that will afford needed dialogue regarding economic and community development issues impacting so many within the state of Alabama. At Renaissance, our outreach mission does inspire the building of communities by facilitating necessary technical assistance programs, small business mentoring, and providing products and services that will meet the needs of each and every customer within our footprint of service, including certain wealth-challenged communities and neighborhoods in the state of Alabama. Therefore, we pride ourselves as an institution that supports fairness and equity and perpetuates trust in our corporate social responsibility efforts and initiatives. Founded in Tupelo, Mississippi in 1904, we are celebrating 117 years as a community bank, seeking to understand and meet the needs of all customers. From the beginning, it has been our company's desire to serve our communities by offering competitive products and services necessary for all neighborhoods and communities to be most viable. We firmly believe and know that when communities and neighborhoods prosper, Renaissance Bank prospers. Therefore, as a community partner, we seek to be a community development catalyst to fill social needs and help ensure community and economic prosperity for all. In 2005, we strategically changed our name to Renaissance as we were very aggressively expanding our operations throughout the southernmost states as a publicly traded company. Today, we have approximately 2,500 employees, and we operate many lines of business, including banking, lending, financial services, mortgage, and insurance, out of 190 plus offices located in the states of Mississippi, Tennessee, Alabama, Florida, and Georgia. BAR's efforts to champion economic parity is applauded by Renaissance. We too strive to commit ourselves to these same measures, small business growth and community development, thus focusing our community empowerment efforts in a strategic fashion through a program we call Renaissance Roots. As Chief of Community Development and Corporate Social Responsibility, I am thankful for partners like BAR, dedicating your network as a vehicle of community and economic service in support of neighborhood revitalization and financial wellness for all individuals. You, along with so many others, deliver great community and economic programs, which we are honored to support. We partner with many business affiliates, CDFIs, local and state government agencies, nonprofit agencies, and education associations for such purposes. It is through these partnerships we demonstrate that we are open for business and learn how to better serve our communities and meet the banking needs of all clients. I want to share with you a few highlights of some of our empowerment programs. Those programs geared to offer information, technical assistance, and in many cases, resources. But first, Renaissance was proud to support the Paycheck Protection Program. As a qualified SBA lender, we worked hard as a company to support the small business community during a pinnacle period of COVID. Recognizing the devastation this health emergency caused for so many businesses, Renaissance was committed in using our distinction as an SBA lender to help as many small businesses as possible. I am thrilled to share that over 25% of the PPP loans we made benefited LMI communities and LMI individuals. The Nest is a financial education and mentoring program for female small business owners and entrepreneurs. And we host it annually to provide information and assist those business owners in the growth of their businesses. Female-owned business represents an important part of any vibrant economy. Renaissance seeks to demonstrate our commitment to this important sector through the Nest. Our capacity building technical assistance program is offered to selected participants, and it provides them an opportunity to participate in a 6-week business and technical assistance boot camp. The sessions feature industry experts who offer valuable information on business growth and sustainability. Following the 6-week program, the graduates receive from the bank a capacity building grant, which has totaled as much as $5,000 per grantee. 80% of those who go through the program become bank customers. And our Centers of Influence program, which is a networking program, allows us to share with business and community leaders who we are, tell them about our products and services, and introduce them to leaders within our company. We engage genuinely in these type programs because they're needed, and it shows our involvement in the community and allow opportunity for increased community and economic development success. We are very proud of the many competitive products and services we offer, including our community homebuyer program. The CHP program provides attractive mortgage and residential product offerings to first-time homebuyers and others in many of our established neighborhoods and communities, and also in new neighborhoods located in revitalized areas. Renaissance Bank, the People's Bank, is committed to exploring solutions to meet all of our clients' needs. We are an equal housing lender and ready to support and ready to serve with competitive product offerings. In conclusion, no one can tell the Renaissance story as well as our president and CEO, Mitch Waycaster. Mitch has been with our company for over 40 years, beginning his career in compliance, the central pulse that measures for us how we're doing relative to fair lending and servicing by our company. It was his influence and that of Robin McGraw, our executive chairman, who shaped community development and corporate social responsibility as a priority for our company, which is exactly as it should be. Renaissance believes that everyone's voice should be heard, and we take it a step further by saying that everyone's banking needs should be addressed. We may not be able to support all of them, given individual circumstances, and we get this, but we strive to be in a position to know about those needs and do our very best to answer or meet them as well as we can. Without community development, there can be no economic development. And at Renaissance, a community bank, the People's Bank, we believe it is our responsibility to enrich the communities we serve by working hard to support their banking and financial needs. Not only is this good for business, but it's the right thing to do. Thank you to Mr. Bob Dickerson for your advocacy work relative to fair and equitable solutions for citizens, all citizens seeking advancement in community and economic development. Again, on behalf of Renaissance Bank, it is our sincere hope to join you, Mr. Dickerson, in this noble and very necessary cause.
Thank you, Bob. My name is Paul Carruthers. I manage community development for Regions Bank and for the North Central Alabama and North Alabama area. And I welcome you today to the Birmingham, Alabama Reinvestment Annual Conference. I appreciate the opportunity to be with you today and share some insight into Regions Bank. Regions Bank proudly serves people in 15 states across the South, Midwest, and Texas, where we operate approximately 1,500 banking offices and 2,000 ATMs. Regions is one of the nation's largest full-service banking providers of consumer and commercial banking, wealth management, and mortgage product and services. Headquartered in Birmingham, Alabama, Regions is the only Fortune 500 company in the state and enjoys the #1 market share where we have 193 branches. According to an economic impact study from nationally recognized consulting firm Tripp Umback, Regions had a $7.6 billion impact on the Alabama economy in 2018. And this study revealed that based on 2018 data, Regions Bank supports both directly and indirectly 32,171 jobs and provides $11.1 billion annually to Alabama charities through corporate donations. Regions associates are actively involved across the state, serving in various capacities that assist many types of organizations. The study also revealed that Regions supports the local economy through more than $3.3 billion in loans to consumers and small businesses across Alabama's 67 counties, spurring economic activity statewide. More than $266 million in state and local tax revenues, both directly and indirectly, are generated by Regions' presence in Alabama. The report finds Regions Bank significantly strengthens the Alabama economy with the most dramatic impact on Greater Birmingham, where more than 36% of employees reside. In 2018, the company had a $4.1 billion total impact on Jefferson and Shelby counties. This includes nearly $2.2 billion in direct expenditures and payroll and non-payroll expenses, as well as an additional $1.9 billion in indirect or induced spending. The study highlights how Regions invest locally through economic and community development, financial wellness programs, and education and workforce initiatives. Driven by a powerful purpose to make life better for Regions customers, associates, and communities, Regions is focused on creating shared value as it helps people meet their financial goals and aspirations. Anchored by our mission to make life better, as a company, Regions Bank is committed to making a strategic, positive difference in the communities we serve. This is more than just a nice statement. This is part of a clear strategy at our company. We live here, we work here, we see ourselves as partners in the success of our communities. Beginning in 2018, Regions adopted a more strategic approach towards community engagement, with a clear focus on creating and supporting more inclusive prosperity. This is what that is. We want to help level the playing field. We want more people to have a chance to succeed within our communities. So we're focusing more of our time, our talents, and our financial resources towards causes that empower people. Our strategy is based on 3 key priorities: education and workforce development, financial wellness, and community and economic development. Often the difference between those who succeed and those who do not is whether they had a chance to the right opportunities. Did they receive a quality education? Could they access the training they need to launch a career? If they're a small business owner, do they have the expertise they need to manage their growth over time? In Regions, we can help. Our associates have a skill set that helps them share valuable insights as they volunteer their time and talents in our communities. Further, we support school systems, community groups, workforce training programs, and other initiatives that empower people with the tools they need to succeed. Our focus in this area is on pre-K to 12th grade teacher training and post-secondary education partnerships. Some of the feedback we hear from employers is they cannot find qualified people to fill the jobs that are available. That's why we're investing in education and workforce readiness programs that are preparing people not only for the jobs of the day, but for the careers of tomorrow. Our second priority is financial wellness. We do this through programs that teach people how to save more, spend wisely, manage credit in a productive way. That's why you'll see us in the community teaching financial education fundamentals to students. And across our markets, that's why we're working with community groups and nonprofits, helping adults plan for and reach financial goals. And that's why we make financial education available to anyone at any stage of life for free at regions.com. Our curriculum includes programs for consumers as well as for small businesses. And these are regularly scheduled virtually. And I'll be glad to work with this group to make these available, which is easily done via our WebEx platform. We are constantly seeking innovative ways to support and create greater financial wellness. As more people become financially secure, that's a tremendous benefit for them personally, for their family, and for our communities as a whole. Our third strategy is economic and community development, and this is about fostering more inclusive prosperity through making investments in strategic programs, initiatives, and new developments across our communities. We're focused on ideas that have measurable long-term impacts. Regions' focus on economic and community development includes affordable housing, job creation, small business development, and neighborhood revitalization and stabilization. For example, company-wide, we invest in affordable housing through the purchase of low-income housing tax credits. We allocate approximately $300 million a year towards these credits. And these provide substantial equity that's necessary for affordable housing developments to be built. We're also supporting the redevelopment of existing housing through renovations and rehabilitations with the goal of providing higher quality housing and greater opportunities for people. We recognize that aspiring entrepreneurs and some existing small business owners have challenges obtaining traditional small business loans and may need extensive technical assistance. This is why we support community development financial institutions which provide technical assistance and offer non-traditional credit facilities. During 2020, Regions was focused on meeting all of our small business customer needs with the Paycheck Protection Program. We issued over $5 billion in PPP loans to 46,000 small businesses. And in Alabama, we issued 553 loans totaling $162 million. This initiative helped many small businesses remain open and sustained employment for many Alabamians. Our experience is what helped us identify these three main priorities. We have done so because over the years, we've recognized that these are the areas in which Regions can make the most impact. In addition, we're constantly taking new steps to enhance racial equity across the communities we serve. Regions President and CEO, John Turner, released his discussions of our work to address racial injustice and inequality. Regions is very proud to have been recognized by the Birmingham Business Journal as a leader in diversity. And earlier this year, the A.G. Gaston Conference recognized Regions for our longstanding support of African American entrepreneurship, and we are very proud of that recognition. The Regions Foundation is active in supporting each of our strategic priorities. In June of 2020, Regions Bank and the nonprofit Regions Foundation announced a 2-year, $12 million commitment to support and advance programs and initiatives that promote racial equity and economic empowerment for communities of color while creating more inclusive opportunities for success. We believe that as a financial services organization, we can, we should, and we must use our resources and experience in ways that help address disparities and create positive change. While we've made some significant progress, much more work remains to be done, and the commitment we announced in 2020 has been followed by action leveraging our time, our talents, and our resources to make a difference. Our teams have deep relationships with organizations on the front lines of moving our community forward. We're working hand in hand with these organizations and are developing additional community partnerships to achieve our shared goals: racial equity, expanded opportunities, and a more just society where everyone can prosper. We believe that as a result of these priorities and strategies for community engagement, regions can allocate more of the resources we set aside for community investments towards the causes where we are most qualified to make a difference. And we want to thank the Building Alabama Reinvestment community for your work to address disparities and create positive change. The key to our success as a society is for more organizations to consistently identify new and meaningful ways that we can move forward as one. Thank you again for the opportunity to share some of our insights into Regions Bank, our philosophy, and our actions that are helping us fulfill our strategic priorities and serve our communities.
Hello, I'm Paula Beck, Senior Vice President for Wells Fargo's Community Relations in Alabama, Tennessee, and Mississippi, and I'm located here in Birmingham. Through Wells Fargo's support in the community, we hope to build a more inclusive, sustainable future for all by opening pathways to economic advancement, supporting safe, affordable housing, empowering small businesses to thrive, and enabling a just, low-carbon economy. We do that through a number of ways, including local and national grants, and through our employee giving and volunteerism. In 2021, Wells Fargo's strategic focus areas will include 4 areas: housing affordability, financial health, small business growth, and ESG sustainability, which is a new area for us and focuses on accelerating a low-carbon economy in our communities. More details can be found about these areas on our website. But overall, we're seeking to fund nonprofits with strong financial track records that align with these 4 strategic areas. And this year, we'll be funding fewer nonprofit partners, concentrating on those that can deliver the strongest outcomes. Application will be by invitation only. We have a number of national efforts that align with these 4 priorities and touch our local communities. The first, Diverse Community Capital, is a $175 million program with CDFIs, or Community Development Finance Institutions. Provides capital and technical assistance to diverse small business owners in the U.S. Approximately 75% of the awardees were led by leaders from underrepresented groups. The DCC program has enabled CDFIs to lend nearly $350 million to Black and African American small businesses across the U.S. since it launched in 2015. Hope Enterprise Corporation in Jackson, Mississippi was one of its first recipients, and they also have offices here in Alabama, in Tennessee, Louisiana, and Arkansas. The Open for Business Fund is another program donating our gross processing fees from the Paycheck Protection Program in 2020, or approximately $420 million, to nonprofits helping small businesses navigate the pandemic. And with a special emphasis on small businesses owned by Black, African American, and other small businesses of color. Here in Alabama, we had 2 recipients. Huntsville's Neighborhood Concepts received $550,000, and Birmingham's Sabre Finance received $250,000 grant from that program. Another program so important during these times of the pandemic and uncertainty is helping housing assistance to keep people and families housed. A $5.5 million grant to 15 legal assistance organizations helps provide free or low-cost legal representation to people at risk of eviction. About 60% of the people served are of color, and here in Birmingham, the Birmingham Volunteer Lawyers received a $300,000 grant under that program. We also are very excited about a recent announcement that we made in 2021 about Wells Fargo's investment in 11 minority deposit institutions as a part of a $50 million commitment to foster economic growth in Black and African American communities. Part of this equity capital investment, Wells Fargo is also offering a dedicated relationship team that can work with each MDI on financial, technological, and product development strategies to help each institution strengthen and grow. We had two MDIs in my markets that received a part of this investment. Commonwealth National in Mobile and Citizen Savings in Nashville. Last, I'll mention again that Wells Fargo not only supports our communities with dollars, but with human capital in the form of both volunteerism and board service. Right now, we're not doing a lot of in-person volunteering, as most people aren't, but we've pivoted to virtual activities, and especially delivering financial literacy seminars. And on that note, I'll mention we have a great website, Hands-On Banking, that has a wealth of resources, lesson plans, and personal finance information for all ages. And it's open to both individuals and groups to use. And I mention this as you may want to use it with some of your constituents. Both the grant website and the Hands-On Banking links are on my bio. And I'll close by saying thank you for letting Wells Fargo share information about what we're doing in the community.
Hello, I'm Beth Trotter, CRA Officer at First Horizon Bank. Thanks so much for having me to provide some remarks today at the virtual Building Alabama Reinvestment Conference. Since I took on the role as head of CRA at Iberia Bank over 10 years ago, I've been involved with several industry-leading organizations such as Building Alabama Reinvestment, NCRC, and others. I've attended this event as a sponsor now for almost 10 years. I found that early access to current developments and the relationships with groups such as bar members and attendees to the conference are invaluable to my work in community reinvestment. You may be wondering about our recent merger of equals between Iberia Bank and First Horizon Bank. We legally closed in July of last year and are working through the integration of our two combined companies to one bank with $83 billion in assets and over 288 years of combined banking experience. It's been an exciting journey, particularly with the unique challenges the pandemic has brought to us all personally and professionally. We're very excited about the benefits of the merger, to include the great similarity between our two companies in our commitment to community. Both banks have strong legacies of being focused on and responsive to specific needs in the markets where we operate. We're proud of our strong relationships and partners we have, both nonprofit and civic oriented. By adopting the most effective elements from each institution's program, we're bringing together relationships established by each bank to be even more responsive to community development needs. Of course, a bigger company brings greater resources. We now have much more expertise, better technology, and more funds dedicated to CRA initiatives and partnerships. Finally, one more robust product suite helps us to meet the needs of our clients more comprehensively. As we like to say internally, we truly are better together. Like most banks, particularly those of substantial size, we support our communities in a number of ways. Affordable housing, financial literacy, and small business development are some of the primary pillars of community reinvestment, as these are some of the primary needs of the LMI communities we serve. I'm particularly proud of our partnership with Operation Hope, which began in Memphis in 2014. We have 30 Hope Inside locations now across our footprint with full-time financial coaches, including 6 small business entrepreneurship coaches. In 2019, over 6,000 clients were served and over 217 new small businesses were created as a result of this partnership. And we also recently announced our support of the 1 Million Black Businesses Initiative with Operation Hope and Shopify by committing 500 hours to small business technical assistance training with our associates. Additionally, within the bank CRA program, the bank assists organizations that help revitalize and stabilize low-mud income neighborhoods. For instance, in 2020, at the beginning of the pandemic, the bank provided much needed support to several development organizations throughout the bank's markets in response to COVID relief efforts. These funds were used to assist LMI residents experiencing difficulties through the pandemic by providing food, shelter, financial assistance, and other critical services. Other types of organizations supported by the bank include those dedicated to assist with workforce development needs, such as colleges and universities, as well as CDFIs and other organizations involved in economic mobility work, as well as diversity and inclusion efforts. Bank support goes to organizations dedicated also to disaster preparedness and recovery, as well as those dedicated to promote access to basic banking services. Finally, the bank has a private charitable foundation which supports a wide variety of organizations dedicated to arts and culture, education and leadership, the environment, financial literacy, and health and human services, among others. Of course, time and resources are limited, so we have to be strategic in our partnership selections. It is very important that our nonprofit partners run their organizations like a business. They need to be reputable, operated in a safe and sound manner with a track record for performance, and are led with integrity. It is critical for our partners to be able to prove the value and return on our investments. Through our investment of time and financial resources, we stay in tune with the changing needs of our partners and clients, which was particularly important with our COVID donations and support over the past year when the needs of our nonprofit partners and their beneficiaries shifted. We support partners in a number of ways, everything from operational and capacity needs to specific projects and initiatives. One example that comes to mind is our Habitat for Humanity relationships across the bank footprint, which include many board leadership positions and contributions, as well as whole loan purchase programs. Through the purchase of select mortgages, the bank enables these entities to substantially increase housing production by allowing them to leverage other funding sources. In working with Habitat, LMI families seize the opportunity and possibility that decent, affordable housing represents. Thank you again for allowing me to be a part of this event. It's always invigorating to hear about the progress being made to support our communities and the opportunities for continuous improvement. And as the year unfolds and the restrictions are lifted, I sure hope to see many of you in person in the near future. Thanks again and have a great conference.
Well, just let me quote John Taylor once again. Banks are our community's best hope. And I think you got a sense of that from listening to our partners, my partners, and people that I really want to partner with, and I want you to partner with them, and they want to partner with you. Banks are our community's best hope. Let's make sure that we develop partnerships and programs with banks that help our community. So thank you all to my friends from our local banking community for sharing that valuable information with our audience. Now it's time for us to hear from some of our members. You know, we have some outstanding members of BAR and the National Community Reinvestment Coalition right here in Alabama. And I want to get you an opportunity or give you an opportunity to hear from just a few of them. And I'm going to tell you who they are. Once again, they're going to come in the order that I introduced them and share with you some of the things that they are doing in their organizations. And maybe that gives you some ideas about some of the things that you may do in your growing nonprofit community development organization. Our first speaker will be Lisa McCarroll, who represents Navigate Affordable Housing. Lisa will be followed by Mr. Chris Rowe with the Community Action Agencies of Alabama. Chris will be followed by my good friend Isabel Rubio, who heads up the Hispanic Interest Coalition, and they will be the cleanup hitter for this session is Pastor Van Moody of the Worship Center representing the Hub CDC. I hope you get a lot out of this section. Lisa.
Thank you, Bob. And thank you to BAR and NCRC leadership for the opportunity to share a little bit about our organization. I'm Lisa McCarroll, and I'm CEO of Navigate Affordable Housing Partners. Like many nonprofits, Navigate has a vision. Ours is to be an instrument of change, revitalizing communities, empowering people, and expanding housing options for everyone. We work towards this through our mission, which centers on ensuring full and equal access to quality, livable housing choices. But that has to be undergirded by something. For us, it is supported by our core values: quality, service, respect, innovation, and accountability. But what does all of this mean? How do we put it in practice? For us, these words become action through our work, and we are focusing on three particular areas. Housing provider. Navigate has served as a housing provider for well over 20 years. Right now, we have a small number of units serving families and the elderly and disabled here in the Birmingham area. Government contracting. Like housing provider, we have done government contracting for well over 20 years. The government contracting work is mainly compliance and working as a regulatory agent. Some of the responsibilities under that contract include negotiating tenant-landlord issues, conducting on-site compliance audits, and doing education and training with property owners and property managers. We have done this service for long enough that we now work with over 1,100 individual properties across the country, which translates to 77,000 families in need of housing. Our third area of work is community development. And community development is defined by many things, by many people in different ways. For us, it means being thoughtful about who we work with and how we work with that community and or those partners. Navigate selected the North Titusville community in Birmingham to do our community development work. And we are focusing on 3 areas. Education. Washington K through 8 services the North Titusville community. For those of you that don't know, Washington students and that school have remained on the failing school list for a number of years. We have been giving financial resources to that school to help lift those students off of the failing school list and improve academics. We also give of our time, whether it's volunteering at a school activity or going to just paint or sweep around the outside of the school area. Now, many of you, I'm sure, were saying, well, what does education have to do with housing? Certainly, all of us would agree, a good, strong school is one of the foundations of a strong and healthy community. And so a part of our work in a community, at least in North Titusville, will be focusing on education. The other area of focus for us in that North Titusville community is economic development. Now, some of you can see the Mark Steele campus on the screen. Mark Steele is a 6.5-acre former steel processing mill that is right next to Memorial Park, which is historic, right in North Titusville. Now, on its face, Mark Steele does not have anything to do with housing. However, this particular campus had been a blighting factor on the community for a number of years. And so in order to provide some support for those home values so that they don't decline any further, to ensure that whatever work or service happens on the Mark Steele campus is appropriate to the community and is a complement, we acquired it. And now we're working with partners to turn that campus into a positive and uplifting use for the community. Our third area in North Titusville is housing. And I've mentioned already earlier that we're about expanding housing choice and community revitalization. But we're also concerned with ensuring that we can provide housing that is sustainable and can be replicated in other communities. Our research and development efforts have led us to support modular housing. Now, to be clear, modular is a construction process, not a product. And I think that's an important distinction. It's high efficiency, it is quality construction, it is sustainable in that you don't have as much product waste, and the safety and security of that construction process is certainly outstanding. But most importantly, it provides a cost burden. It reduces a cost burden to families. Modular housing, because of the construction process, is more energy efficient. We are fortunate to be partnering with Alabama Power Smart Home Communities so that the homes that we will be providing that are modular will carry that designation and increase the energy efficiency and, of course, lower the cost burden to that homeowner. Our maiden voyage, if you will be Live On First, our North Titusville workforce housing. This will be 3-bedroom, 2-bathroom homes with off-street parking. As I mentioned, they will carry that Alabama Power Smart Neighborhoods Homes designation. And what that will mean are little things like LED lighting, appliances that are energy efficient, air seals around the physical plant, all towards driving down the carrying cost over time for that homeowner. The homes, because they're modular, can carry a different orientation depending on parcel size. And we hope that this project, well, we don't hope, this project will be ready, the homes will be ready for move-in on August 1st of this year. Again, I mentioned our partners, Alabama Smart Neighborhoods, and of course, Design Initiative, who served as our architects on this project. Navigate Gives Back is our way of social responsibility. Certainly through our work and in advancing our mission, we work in a community and through a community to do good, as one of my board members would put it. But we also give of our own individual time. Staff will participate in the Salvation Army Angel Tree, which is quite high on the list of primo assignments here at Navigate, and certainly work in the community with homeless shelters and homeless service providers throughout the year. I hope that what you've heard and seen in this little short time is a callback to what we titled this presentation, Powered by People. Whether it's in service to the people through our volunteer activities or working in communities, whether it is providing a place for people through our home initiatives, people is at the core of everything we do here at Navigate. I've talked about where we are and what we're doing. I'd like to leave you with something that is aspirational for us here. The Community Revitalization Fund. A couple of years ago, we established the Community Revitalization Fund with the intent of exploring, can we become a CDFI or some type of meaningful lending partner to advance housing, not only in the Birmingham region, but perhaps outside of the region. Again, it's aspirational. We're not sure. But even with the Community Revitalization Fund, it is powered by people, and that we want to do our part as a nonprofit to make a place for people, or help make a place for people and revitalize communities. Thank you so much for this opportunity to share, and we look forward to many more successful bar conferences.
Thank you, Bob. And hello, everyone. I'm Chris Rowe, the Executive Director for the Community Action Association of Alabama. Today, I have the pleasure of sharing with you more about community action agencies across the nation and the state of Alabama. First, I think it's important to know that community action agencies were established in 1964 during Lyndon Johnson's War on Poverty. Community action agencies receive what is called the Community Service Block Grant, or CSBG funding. The goal of CSBG is the reduction of poverty, the revitalization of low-income communities, and the empowerment of low-income families and individuals to become fully self-sufficient. The Community Service Block Grant is designed to help low-income individuals and families secure and retain meaningful employment, attain an adequate education, improve the use of available income, obtain adequate housing, obtain emergency assistance, including health and nutrition services, remove obstacles which block the achievement of self-sufficiency, and achieve a greater participation in the affairs of the community. I know it sounds like a lot for one program, but what it actually means is that the purpose of CSBG funding is to truly address any barriers that prevent individuals and families from achieving self-sufficiency, making it a very powerful and dynamic funding stream. Local agencies leverage their CSBG dollars, which is about $740 million across the country and about $13.5 million in Alabama, to bring in other funding streams and programs, many that are vital programs and services, but do not provide enough administrative funding to operate. CSBG funding helps make that possible. In addition to CSBG funding, local CAAs have a variety of other funding that may include Head Start and Early Head Start, WIOA, HUD, USDA, LAHEAP, Pre-K, and a host of other state, local, and private support. Nationally, there are over 1,000 community action agencies across the country, and collectively, we touch the lives of 15 million people annually. In Alabama, the number is well over 200,000. Every community action agency has what is called a tripartite board, made up of 1/3 private, which is standard and typical for nonprofits, but also 1/3 elected officials within the community, and at least 1/3 are low-income representatives that are democratically selected from the low-income communities in which they reside, giving us a governing body of private, public, and low-income members from the community that are now directing and making decisions on how the agency will address issues within their communities. Our network has a national, state, and local infrastructure. This includes legal and financial guidance for all of our agencies with CAP Law, a national partnership with NCAP, a national association for state lead agencies, and much more. Here at the State Association, located in Birmingham, Alabama, my job is to provide advocacy, support, and resources directly to and for the 20 local community action agencies across the state. These 20 agencies provide services in all 67 counties. In fact, there is a CAA office, a physical location in every county. I cannot say this enough. CAAs were created to address the unique local causes and conditions of poverty, with an objective of moving individuals, families, and communities out of poverty. And as I'm sure you all are aware, communities can be quite different one to the next. There's a saying in our network, if you've seen one community action, well, you've just seen one community action. CAAs are designed to meet and address the needs of their community, utilizing the flexibility that CSBG funding provides. Right here in Alabama, we have local agencies that are housing developers, some that are financial oversights for other nonprofits, volunteer income tax assistance sites, housing counselors, Meals on Wheels, and so much more. Although each agency in the state of Alabama and across the country have different but similar missions to address poverty, we all are grounded in and utilize the same community action promise. That promise is community action changes people's lives, embodies the spirit of hope, improves communities, and makes America a better place to live. We care about the entire community, and we're dedicated to helping people help themselves and each other. Being a participant of this conference tells me that you care about your community and that you have a vested interest in seeing your community thrive. I strongly encourage each of you to reach out to your local community action agency, become a board member, or see how you can become a partner to achieve common goals. To conclude, I just want to say thank you for the work that you do in your respective communities and across the state to make Alabama better. And a special thank you to Barr and Bob Dickerson for keeping us informed and for always fighting the good fight. I'm hopeful my time with you today has been beneficial and that you continue to enjoy the conference. Thank you and have a great day.
Hello, I'm Isabel Rubio. I'm the founder and CEO of HICA. I'm also a member of the board of directors of BAR and delighted to be with you in both of these capacities. BAR serves such an important place in our community development landscape in Alabama. For organizations like HICA to have an organization like BAR, which helps create collaboration and fosters communication with community development organizations and financial service providers, is really critical in terms of moving the ball forward for community development in Alabama. So I'm going to share a little bit with you about HICA, and I'm excited to do that. So please join me as we watch this PowerPoint. HICA was founded in 1999 as a way for new immigrants in Alabama to achieve their dreams and aspirations. You know, Alabama has got a very black and white past. And with Latinos moving to Alabama, we wanted to make sure that we created space and also worked to collaborate and create collaborations and relationships of understanding between two communities so that we could build on our strengths. As you see, our mission is to foster economic equality, civic engagement, and social justice for Latino families in Alabama. And our vision is of an Alabama in which everyone has full and equal participation in our civic, cultural, social, and economic life. Latinos and immigrant families contribute to our community, and we need to make sure that there are avenues and pathways for that, for families to achieve their dreams and aspirations. We work through a model of immigrant integration, which basically is a two-way process where both the immigrant community and the host community learn about one another, because there's always misconceptions and misunderstandings on both sides. And so we work to make sure that we can help communities know each other, because by doing that, we build vibrant, inclusive, and secure communities for everybody. And that really, at the end of the day, is the formula that we need to make the economic impact that we know we can do. So for HICA, we work on a continuum. We started back in 2000 with doing information and referral assistance, and really from those days of a 1.5 staffed office to today, where we have a staff of 26 incredibly competent and talented professionals to do the work that we do, which promotes full integration in the community. We have 4 programs, but I'm going to focus today on the work that we do around financial stability. And I'd like to just share this little drawing that I made with you, which sort of gives you a picture of how HICA works, from our Strong Families funnel in the top left corner of the screen, all the way down to the buildings downtown, which represents a vibrant, secure, and inclusive community. As I mentioned, our Community Economic Development Program is really the engine that moves HICA forward today. In 2013, we began to assist our community in the provision of income tax completion. And we did that because there was a need in the community. And when we began to do that, we began to see that there were other financial and economic needs that our community had. So from that place, we opened our first business a couple of years later. That business is still in existence today. The impact that business has had on the family that owns the business is that they have been able to buy a home in a safe community where they have been able to put their kids in good schools. Their oldest daughter has been an intern with HICA and is now in college and wants to be an attorney to help her community. And so that we see is the transformation of helping people become business owners, which leads to home ownership. And to that point, HICA has got the only bilingual HUD certified housing counselor in the whole state of Alabama. We help folks with foreclosure issues. We help folks with housing counseling. And we are just about to embark on an opportunity to help people with down payment assistance. And so that really is going to be game changing. But to that point, we have helped families. Even last year during the COVID pandemic, we helped 2 families that last year become homeowners. And this year, we have already helped 3 families begin that process. And so we know that this is sort of like a snowball rolling downhill, that it's just going to get bigger and bigger. But the thing that's really so exciting for us is the work that HICA is doing around microlending. So I mentioned to you that we have started businesses over the years, that we started the first one in 2013. Since that time, we have helped over 325 aspiring business people become business owners. And now, through our newly established Camino Loan Fund, which we established in 2019, we will be able to make capital available to micro entrepreneurs. And we've actually been doing that since 2019 through microloans in the form of affinity group lending. And so the group comes together, the members of the group sort of guarantee each other's loans, because these loans are non-secured loans, they're character loans. And, when you're in a group of 4 people, most of them have been women, they're going to make sure that they get the repayment on schedule. And I'm so delighted to say that during COVID year last year, we had not one default on any of our loans. And that to me is amazing. And we even had a group start another cycle at the end of the year last year. So this Camino Loan Fund is really growing. We are in the process, and you can see the information about how much we've lent to date, but we're in the process of completing our CDFI TA grant, which will go in May. And that will provide us assistance to really build capacity in our loan fund to do more. And it is our goal to, by 2024, to have raised $1 million and to have deployed most of that money into the community, because we already see the need. And our next loan is going to be to one of our business owners who has been doing an incredible job with his business. And it will be the first 5-digit loan that HICA has made. And so we are super excited about that. Of course, as we move forward over the next couple of years to get to $1 million, we are working on our capitalization. And so we are excited about the opportunities to help our financial service partners really make this link and be engaged with the community, because it's so important in helping our community get to the place that they can then move on to more traditional loans at larger financial institutions. So this is the forward movement of our work. We are also in process of becoming a HUD certified housing organization, and we're doing that in collaboration with the United Way of Central Alabama, who is a partner of ours. I'm not going to list all of our partners here because I'll forget somebody, and we have so many important partners across the community that have made it possible for HICA to grow this work. We are grateful for those partnerships and know that together we can do more. That's just the fact. And so for HICA, when we look about where are we going in the future, we see that the community development work will likely spin off as we have this Camino Loan Fund. There are possibilities around housing, because that is a critical need, not just in the Latino community, but in the community across the board. And so we are excited about opportunities and possibilities that lie ahead for that. But for today, I'm going to leave it here. And thank you all so much for your participation, your attention during my presentation. And my contact information is irubio@hicaalabama.org. And so you can contact me. And here's also other contact information for our organization. You can check out our website or any of the social media platforms that you might be connected with. Thank you so much. Enjoy the rest of your conference.
Hi, friends. It is a joy and honor to join each and every one of you that are part of this amazing BAR conference. And first and foremost, let me also express my appreciation to our esteemed leader, Bob Dickerson, and to his entire team, Brandon Pettigrew, and so many others at the BBRC that make this conference and so many other impactful initiatives possible. I am grateful and remain grateful for the work that Bob and his team have done and are continuing to do to help lift the Birmingham community, particularly to spur on innovation, creation, and community development. So I'm honored to be a part of this amazing conference. My name is Van Moody. I have the honor of serving as the board chair of the Hub Community Development Corporation, and I am also joined by Bridget Chisholm. Bridget is the CEO of BWC Consulting, and what we're going to do today is to talk about a great project that we are working on that really we believe is a great example of what can be done by way of community development and serving underserved communities, but particularly by way of a new approach, a new way of thinking about community development. And so, because we're working on a specific project, we're not going to talk specifically about the project, but we are going to get into the philosophical approach, really, this new paradigm, if you will, that is the substratum upon which this project is built. And to do that, I want to start by taking us back for a moment and challenging us to think deeply about the issues and the disparities in Alabama. I want to share my screen here for a moment because I think that many of us are aware that Alabama, unfortunately, is known as the citadel, if you will, of the segregated South. But at times, I do wonder if our approach to community development and serving underserved communities uh, takes into consideration the full impact of the historic and systemic issues that really contribute to why certain communities remain underserved. So let's talk about it for a moment because I think it will give great insight into why our project is unique, but then also why projects like ours should be the new norm as it relates to how we think about community development and serving underserved communities. So I want to begin by showing you first and foremost this map that is a picture of where communities of color, particularly the African American community, were relegated to live, going all the way back to 1926. So, if you're familiar with Birmingham, you see 65, 59, 20, and 459. But what I want you to key in on are these Black areas because these areas are the areas going all the way back to 1926 where African Americans were limited in terms of where they could live. They could only live in these areas. Now we think that this is 1926. Today is 2021. A lot should have changed. Well, not so fast, because what you're looking at now is an updated census map that shows by racial and ethnic distribution where the majority of African Americans reside. The red are Caucasians, the blue are African Americans, the green here, Hispanics, and then the yellow that you see a little bit here are the Asian community. But what you should see is that things haven't changed that much from 1926 to 2021. The same areas going all the way back to 1926 where African Americans were forced to live, still the predominant area where they live today. Let's take this a step further. Um, Beyond that, what you also should see is that the percentage of the population in poverty is also in the exact same place. So when we think about the highest percentage of those in poverty, this is what this shows us. The deepest green are also in the exact same areas that coincide with where African Americans were allowed to live going all the way back to 1926. So by now, you should begin to see a pattern that where African Americans were allowed to live in 1926, the exclusive areas where they could only live in 1926 are the same areas now where African Americans predominantly populate, but then it's also the areas with the highest percentage of poverty. It is also the area with the lowest life expectancy. So when we begin to think about the shortest lifespan, the lowest life expectancy, guess what? It is predominantly in these same areas. And so I could go on and talk about this and the ramifications in a greater way because these are the same areas where the crime is the highest. These are the same areas where the schools, in terms of educational performance, are the worst. And so you begin to see the pattern. This is also the same areas where you see an overwhelming amount of food deserts. And so we know that all of these factors contribute to why underserved communities are underserved. There are historic and systemic issues that contribute to why these communities continue to be marginalized and oppressed. And I want to take it a little bit deeper because this article recently that came out at the third quarter, fourth quarter, if you will, of 2019 shows us even the health disparities, that Alabama is one of the 9 largest states in terms of obesity in the United States. But going back to what we saw earlier, guess where the largest population of those individuals are in these same areas. So we see that this has health implications, this has education implications, this has life expectancy implications. It all lines up. And the reason I'm showing this to you is because what I want to submit to you today is that our approach to community development has got to be holistic. That when we begin to think about serving underserved communities, we can't think in a one dimensional sense. We can't think, well, let's just address economics, or let's just address health, or let's just address education and in those isolated kind of silos. We've got to think about a holistic approach that takes into consideration all of these things, because this is why poverty is perpetuated in these communities, because all of these individual things feed off of one another. They lead to the perpetuation of communities being underserved. So we see that Alabama is plagued not only health wise, but then, when we start talking about health, and health should be top of mind for all of us now. We have been living through the COVID pandemic, and we also know that communities of color, 3 times higher infection rates, 6 times higher death rates as it relates to the COVID pandemic. So once again, communities of color are being decimated, especially in Alabama, as it relates to all of these factors that have continued to contribute to the marginalization and oppression of these underserved communities. I love this quote by Bobby Holt that wrote about the price of fitness and how obesity, once again, is more prevalent in low-income populations. And he said that in low-income communities, there are often programs addressing food intake, sleep habits, and yet less effort has been made to resolve challenges around exercise. According to a study conducted by Concordia University, individuals that earn less than $20,000 annually were 50 times less likely to use exercise as a weight loss tool. And he goes on to say that they simply don't have the resources, that many of these individuals have to choose between clothing over food, or shelter, or healthcare, or basic necessities. And so this notion of how do we address even the health disparity is a big issue that we've got to address. And so I share all of these things with you because I want you to understand that these are all of the contributing factors that I think must be considered when we think about community development. This is yet another article that continues to underscore what I shared earlier about how the COVID pandemic has impacted not only Alabama, but particularly these same communities that are underserved. And so, in short, when we start thinking about the scope of the problem, when we start raising the question of why are these communities underserved, why is poverty systemic, why is it hard for individuals to break the cycle? It's because it is not just one issue. There's a confluence of several issues. There's housing shortages, there are food deserts, there are educational issues, and then there's also lack of access to healthy living options. And so, in short, this amazing project that the Hub Community Development Corporation is engaged in alongside BWC Consulting really takes all of these factors and brings together one solution that is designed to address holistically this underlying systemic issues that continue to perpetuate poverty and to keep underserved communities from thriving. And so, if you could, and as I said at the very beginning, I can't really get into the nuts and bolts of our project. You will hear about our project soon enough. But I did want to give you really the reasons behind it. And so I want to stop here and sum it up by saying, imagine a place that provided high quality residences, healthy living and food options, along with spiritual, educational, and economic growth opportunities. That, in short, is our project, but that also is what I believe is a better, more holistic, and comprehensive approach to community development and serving particularly underserved communities. So I want to stop here, and I would love to invite my partner, if you will, Bridget Chisholm, in this presentation to begin to share about why also this represents a new approach to community development and why this is important. And so, Bridget, thank you for being a part of this presentation. Your reputation precedes itself with BWC Consulting and the projects that you guys have really led around the country. And so when the Hub CDC began to embark on this, I was quickly told that if you're going to do anything like this, you got to connect with BWC. And it's been a great journey. We're still kind of in the midst of it, but it's been really significant. Would you talk a moment about why these kinds of projects are important, but then also why CDEs and other lending institutions that are invested or want to invest in lifting up underserved communities should really look at this approach and to follow this paradigm?
Gotcha. Thank you, Bishop Moody, and thank you, Bob Dickerson, and all who are listening in today. You know, when you said, Bishop, imagine a place, and I would tell you that place exists. But you know who it doesn't exist for, which is why I was instinctively drawn to this project, and our team is drawn to it, is that 90% of the people who will have this holistic experience are the low income people from that low income community. And that imagine a place is typically reserved for, you know, market rate developments. And interestingly, market rate developments who are using the same economic development tools that we're bringing to fulfill your vision and the hub's vision for a real solution, but yet the impacts are more on paper for some of those other developments. And with you and with what we are looking at, the benefits in order to actually the people who will be living and participating in this holistic development. And it truly is a high impact project that transforms people's lives. It breaks cycles of poverty. It breaks cycles of, you know, fitness and wellness concerns. So it can be more important to us to show how you use those same tools to really deliver those impacts to people who need that exposure the most in order to break those cycles that you articulated. And I'm going to add, because, and this goes to what I have seen of what you do in your day job, goes back to how you have integrated your teachings around wealth creation and wellness and all of these things, that you also challenged us to bring me a solution, but bring me a solution that's going to make money for the Hub CDC. I believe we can do both.
Absolutely.
And so I want to, and so, you know, so that really sparked my attention and really is a challenge, because most people will tell you that to do what you said, it won't pencil out unless is basically all geared towards non-low income people.
Yeah.
And you said, I don't believe that. So get back to work. So I have a question for you, is how do you practice what you preach, and what made you think that you really could make money? It really could do both, right? We could solve a problem that could be replicated, and yet still be a business venture that, as our banker friends on this who are chiming in, would be interested in doing.
Yeah, well, I think the two things, and I know, time is short, so let me get right to it. I think number one, I have always believed, and I think the data supports this, that the opposite of wealth is not poverty; it's actually a lack of opportunity.
Mm.
And so I have believed for a long time, and the moves that other communities have made around the country has proven this. That if you bring the right opportunities into underserved communities, they can thrive. Because even though individuals live in low income or underserved communities, it doesn't mean that they don't have spending power. When you just look at the spending power of, African Americans and the Latinx community, the spending power is enormous. And often, other communities are the beneficiaries of that spending because we don't have opportunities to really push that spending in those communities in which we live. And so I think it's a misnomer to believe that just because people live in low income communities, number one, that they don't have capital, that they don't have capital to spend. And brands like Nike and so many others could raise their hand and say, well, no, 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 no. I mean, people line up to get the new Jordans when they come out, or, Apple is a prime believer and they understand the power of marketing to all communities. And so the capital has always been there. What has been lacking really is the foresight, the vision, and the understanding that if you bring those opportunities into the community, particularly if these opportunities are geared to address the ills that continue to keep these communities marginalized, then you have something that not only serves the community, but is also bankable. And so there's so many illustrations that we could give. There's so many examples that you and I can point to. You've seen it in other states and other communities. You've seen it with other projects that you've done in other cities. It's now time for Birmingham to really embrace that ideology and to move in that direction. And we're excited to partner with you and the BWC team to bring that to fruition.
No, thank you. And I can't stress enough, because your point of that's bankable, that's always the first thing that you hear from our financial institutions or community development enterprises, the CDEs. If we're looking at new market tax credits, if you're looking at historic tax credits, if you're looking at, different economic development incentives that our municipality may have, blending them all together is how we get it bankable. And the beauty of this project is not only did we get it bankable, but all these on-site amenities, all of this coming together that the community can use, that the residents can use, is really geared towards the people who need the solution the most. And so when we're going after those incentives, we've threaded the needle, and we know how to, and to keep threading it so that we can do this again and again and again. Because as you look at the urban core, other parts of Alabama, this persists.
Yes. 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 Well, Bridget, thanks for being with me. Thanks for being a part of this presentation. Once again, to Bob Dickerson and his amazing team, thank you for allowing us to just take a few minutes to talk about this amazing project. And we hope that we have sparked interest and inspired many of you to rethink community development with a more holistic approach. And for more information about our amazing project, you can always reach us at the Hub CDC, and we will make ourselves available to talk more. So thank you all so very much for allowing us to present and be a part of this amazing conference. Take care.
Thank you.
So that was great. I really want to thank our members for sharing that information. That's encouraging to see members of NCRC and BAR doing great work for our community. So thank you, Pastor Van Moody. Thank you, Isabel Rubio. Thank you, Chris Rowe. Thank you, Lisa McCarroll. Now, it is my great pleasure to introduce to you Jesse Van Tall, our keynote speaker, who is the CEO, the Chief Executive Officer of NCRC. Now, Jesse has been with NCRC since 2006. As a matter of fact, this is the only company that he has worked for. He is that story. A person who started in an entry-level position and is now the Chief Executive Officer. That is a great story. And Jesse has been the person responsible, and I will say most responsible, for the over 200 billion, that's billion with a B, in new investments based on these community benefits agreements that I'm sure he's going to talk about with 12 banking institutions. That is great news for our community. I could go on and on about Jesse. I get a chance to work with him almost on a daily basis, and sometimes it seems like we work together on a daily basis. But let me stop now and present to you the Chief Executive Officer of the National Community Reinvestment Coalition and a young man who has become a great friend of mine, Mr. Jesse Van Tall.
Hello, I'm Jesse Van Tall, the CEO of the National Community Reinvestment Coalition, NCRC. NCRC takes on and works on banks and the government. We fight for economic justice. We have 600 members nationwide who do the same. And Building Alabama Reinvestment is one of our great members. I want to start by giving thanks. I need to thank Bob Dickerson in particular. I know you know what an incredible leader Bob Dickerson is here in Birmingham. And hopefully you know how significant a national leader he is. As the chair of our board for the last 6 years, his steady hand has been integrally important to our growth and success. And this year marks his last year as board chair. And I cannot tell you how indebted I am personally to him. And I want to thank him and recognize him for all of his contributions to economic justice and to the cause. We also want to thank the many members of BAR who have been active with NCRC for years. Together, we are building the power to accomplish big things, and more on that in a moment. The topic of my speech is persist, insist, and do it together. 3 years ago, Bob had me speak at this conference, and I told you there was some stinking thinking going on in Washington. The Trump administration was dismantling many important civil rights laws and regulations. They were tearing into the social fabric of America and elevating racist and nativist ideas. That kind of stinking thinking may not be front and center right now, but it doesn't mean that it is gone. More importantly, regardless of who is in the White House, it doesn't mean that the smell is gone. The stench of injustice remains all around us. There's a lot to be angry about today. It's hard not to let anger consume us. But I have always said that anger has been much maligned as an emotion. Anger controlled and aimed towards a purpose has been one of the most powerful forces in the history of the world. And anger cannot be separated from its natural spouse, which is love. Often we anger because we love, or we anger because we are not loved. We anger at injustice. We anger when we see people we love harmed. We're moved to insist that justice be served. And we need that anger. And we need to be insistent. And we also need to be persistent. Addressing injustice requires persistence. It requires a long-term commitment. It requires all of us to work hard. A thesaurus will tell you that persistence is a synonym for the word patience. They are often used together in the phrase, we have to be patient and persistent. But the Jesse Van Tall dictionary will tell you that they mean completely different things. Persistence is not the same as patience. And even though they mean completely different things, Sometimes when you have persistently done something over and over again, it starts to strike you as resigned, tolerant, or accommodating, all other synonyms for patience. I often ask myself the question, how can we be persistent when so much is wrong around us? When on the same day that we saw a glimmer of hope with the sentencing of Derek Chauvin, we saw it dim with the murder of Ma'Khia Bryant, a great tragedy. And we ask the question, how many times can we preach the gospel of reform only to get knocked over by the wicked wind of racism, heartlessness, and greed? And how do we know, as leaders in the fight for justice, if we are bending the arc of justice or whether the arc of history has bent us instead? Sometimes it feels like we're the ones getting bent over, run over, defeated. A leader I know recently introduced me to the term radical incrementalism. Here I don't use the word radical to mean out there, but rather to mean bold, and to acknowledge that we have a long way to go before we achieve justice. And I don't use the word incrementalist to suggest that our steps towards justice should be small, but rather that we must be clear that we are stepping towards justice, making meaningful progress, that we're adding to the solution, not just continuing the status quo. At NCRC, we are unwavering in our commitment to racial and economic justice. We know that to do so, we have to be bold and be clear, and sometimes to show our anger. We have to be insistent, but we also have to be persistent. We have to make sure we actually make progress over time. It has to be measurable. It has to be sustained. We can be insistent and persistent at the same time. In fact, we must be. Insistence without persistence is just platitudes. That's all it is. And persistence without insistence is just tolerance. We need to do both. Said in a different way, we need more than just ideals and values. We need to do more than articulate our beliefs. We need just outcomes. We need progress. So at NCRC, we created a framework for creating and measuring just outcomes in the context of banking. It's a framework for being insistent and persistent to make progress over time. And it's called the Community Benefits Agreement. It's what Bob asked me to talk to you about today. Now, I'm sure you're all familiar with big talk, big initiatives, big numbers, the kind that corporations announce on their own. And you probably have some skepticism about big numbers because you've seen and heard them before, and yet have seen little or no progress in your community. I hear from NCRC members all the time. They say Bank X recently announced a multi-billion-dollar racial equity commitment. Exactly what does that mean? What is that? What does it do? Who is it helping? In some cases, nobody outside of the bank knows. We invented the community benefits agreements to make those kinds of commitments meaningful, real, to be able to measure real progress. Over the last 5 years, we have reached $298 billion in community benefits agreements. On April 23rd, we announced our latest agreement, an $88 billion commitment from PNC Bank over 4 years. Now, I want to break down those numbers for you because those are big numbers. And I know you're skeptical about big numbers. Those numbers represent the total dollar volume of lending, investments, and services the bank provides, targeted to low and moderate income people and to people of color. Depending on the agreement, these numbers represented 10 to 100% increase in particular categories of activities. Of that 298 billion, around $60 billion is new money, an expanded commitment, a commitment that we as a coalition reached with that particular bank. This is money that probably wouldn't have been invested but for our efforts. Most importantly, these agreements set up specific and measurable targets for the bank to meet. Targets based on low-income borrowers, targets based on Black borrowers, brown borrowers, targets based on minority-owned small businesses, targets to expand home ownership, make loans to an expanded number of people. To give you some examples of this and to make this real, one bank agreed to double its mortgage lending to low and moderate income people. Another agreed to lend to people of color at rates equaling their demographic percentages in the community, a level almost no bank hits today. One bank expanded its philanthropy by nearly $90 million, a more than 100% increase. Another bank agreed to give NCRC $5 million new grants to make to NCRC members. We got to set up the grant criteria and determine the awards. Many of the banks we've reached CBAs with have committed to meaningful expansions of their supplier diversity goals, to tracking and increasing their support for groups led by people of color. And all of their banks have expanded their commitment to work with new organizations, to partner with NCRC member organizations doing housing, small business, community, and workforce development. Most importantly, these agreements establish a different kind of relationship with the banks that enter into them. Most of our members experience an enhanced relationship as a result, with the goal being a two-sided relationship built on mutual respect. Now, I can't address all of the detail of the community benefits agreements, but if you reach out to us, we'd be happy to answer questions about them, about what they do, to give you the detail about how they can move the needle. You can contact me or the NCRC organizing team at ncrc.org. So in short, we need to be insistent and persistent at the same time, but we also need to do it together. A really quick story about my wife, Lauren. I love telling stories about my wife, not just because it annoys her, but because she's a great lesson in leadership. I'm always observing little things about her leadership. And my wife is outspoken, and she's also a Black woman. And when we moved to Tacoma Park, Maryland, which is known as the People's Republic of Tacoma Park, a liberal enclave outside of Washington, D.C., my wife joined the neighborhood listservs. And Tacoma Park, we moved to Tacoma Park because of its reputation for being an inclusive and diverse community. Again, the People's Republic of Tacoma Park, the Berkeley of the East. And when you walk around Tacoma Park, you'll find lawn signs littered everywhere, celebrating different causes, celebrating diversity, celebrating Black Lives Matters, celebrating immigrants. But Tacoma Park doesn't always live up to those ideals. And Lauren, observing this, started pointing things out. On the neighborhood listservs, a note would go out. There's a suspicious man walking down the street. It was a Black man. Comments about people and behaviors in the community. And Lauren would point these things out. She would send out a note, you really need to think about what you're saying. And when she would do this, she would get lots of compliments off the list. We'd walk around the community, she'd get high fives. Oh, I really agreed with what you had to say. But rarely did people chime in and back her up. Rarely did other people in the community themselves have this conversation. But Lauren persisted. She insisted. She maintained her voice. And even as she did, she also built her network and her relationships. She became the moderator of several Tacoma Park Facebook groups and listservs. She made connections with people in the community. And gradually, other people started to speak out too. And as they did, started to see deeper dialogue and more meaningful change, questioning local practices around real estate. For example, the fact that many homeowners in Tacoma Park never list their home when they sell it. They share among friends and family and listservs, a practice that effectively leaves out many people of color and outsiders from ever knowing that a home is for sale and therefore from moving to the community. These kinds of conversations and dialogues have been sparked by a person who was persistent, insistent, and did it together, built community and support along the way. And it's not a perfect progress. There's a long ways to go in Tacoma Park, Maryland. But it's a lesson for us on how we make progress and change, that we persist, that we insist, and that we do it together. And as we take steps towards justice, we also need to ensure that our ability to take larger steps in the future grows, that our persistence strengthens our insistence, and that our insistence helps our persistence endure. What is most interesting about our community benefits agreements is not what they do, but rather how we create them. It's a strategic process of building coalition. We're able to create CBAs because we do them together. Each CBA involves dozens or sometimes hundreds of NCRC members, and the collective wisdom and power of the group is incredible to behold. And with each success, the ability of the group to push the envelope, to continue to insist on progress, to sustain each other in our perseverance grows. And that is how we build the power we need to make real progress on the racial wealth divide, on inequality, and on poverty. So I know many of you are very active, and I'm not telling you anything you don't know, but I want to urge you to be a joiner, to be a part of a movement for economic justice. And I encourage you to join BAR, to join NCRC, to get active in our community benefits agreements, to help us insist and persist for a better world. I want to thank you for having me speak here today. Thanks once again to Bob, and take care.
Thank you, Jesse. Thank you so much for being a part of the 11th annual BAR conference. And thank all of you for taking your time out. Those of you who spoke, our bankers, our community leaders, our participants, members of the BAR Board of Directors, all of you have played a great part in making this a reality. I want to just thank LRY Media for helping us to put this on. You all did a fantastic job, as you always do. Hey, remember this, we're all in this together. It's very important that we work hand in hand, collaboratively, cooperatively, for the benefit of our communities. Now, that's the commitment that I am making. That's the commitment that Building Alabama Reinvestment is making. That's the commitment that the NCRC has made. And I want you to make it as well. Join us. Let's partner together. Let's make Alabama a better place. And in so doing, help to make our country a better place to live. Thank you all so much for being a part of this. We really appreciate it. If there's ever anything that we can do for you, please don't hesitate to let us know. Thanks again.